let's start with this topic, actually. If you look at the markets and the economy and you're unsure of what to do, Wall Street has a new catchphrase for you, and that is Tbill and chill. So far this year, over $38 billion with a B dollars has gone into 1 to 3 month T-bills, currently paying 5.25% to 5.5%. Now, in retirement, we are going to need long and short-term money, but this is really short-term with a lot of maintenance. Is this part of the current retirement planning at America's Retirement Headquarters?
Well, you've been listening to a lot of the segments. We've been talking about how to make every dollar work as hard as possible. Of course, if you're going to move into retirement time, you don't have your luxury of getting up and going to work all the time. So you do need your lazy assets to work for you. So when they talk about that $38 billion that's gone into the 1 to 3 month T-bills, I'm hoping that the overwhelming majority of that has been money that's in non-productive, maybe checking, savings, or other low-interest accounts that can get you up to that 5.5% range. I'll share a story with you. I had met a gentleman. He'd come out to one of our public speaking events that we had did. In fact, this was in October of 2022. And if you go back to that time frame, we know the market was somewhat having a challenge in 2022. Overall, the market ended up pretty sour for 2022. And in October, this gentleman had decided to abandon ship. So talk about Tbill and chill. What he did is he took his equity positions and he got out of the stock market. He moved them over into another traditional fixed investment account. In this case, what he did was put it in a 1-year CD, which, those rates were decent, but they're not as good as what they are right now. The reality is, though, is what he did as part of his planning strategies was completely change the course. And usually if you're going to completely change the course, you can have some pretty painful lessons on that. So if we look back, over the last year or so, what we've seen is most of the major market indexes are up, 20, 30%, depends on what index that you look at. And he missed out on all of that recovery because, although he's able to chill in some of the T-bill rates or fixed rates that are out there, he missed all the recovery. So, the caution that I have is if you're an investor and you're looking at your money, these can be good investments to have that short-term money work for you, but be careful about making dramatic changes with your long-term money. In addition to that, I think a couple of pointers that I would give back to our listeners is when you look at the treasurydirect.gov website, that's the website that talks about these T-bills. A Treasury bill is an investment that matures in typically, anywhere from 4 weeks to 52 weeks. So to me, again, it tends to be more of a shorter term investment. And if we look at it and what the inflation numbers are, if we look at what the Federal Reserve is talking about, with their anticipation of interest rates in the future, it could be likely that we could start to see interest rates come down at some point in the future. So there are other investments that you may want to consider locking in for a longer period of time. In fact, our philosophy has not changed, even with interest rates and how they've changed in the last year. If you go online and go to Google and type independent income system, you'll hear again about what our methodology is about building out the portfolio to help you not only survive, but thrive in today's retirement environment. Again, if you go on Google, you look at independent income system, you can figure out, where are there threats, where there's opportunities. And again, this could be an example of where there's an opportunity to put some of your shorter term money to work. But guys, if I ask you, what are the type of advice that you're giving to people when you're taking a look at, where fixed rates are and nowadays in today's environment?
FIAs are a great place to always take a look. But honestly, this T-bill and chill phrase that they've come up with, I personally feel like it's a little misleading. If you have to make a significant financial decision every 1 to 3 months, do you really feel like you're chilling? No, that's a lot of work. That's a lot of labor. So there's a place for those assets, but really you need to think about how you want to manage your money and how much work you're willing to put in, because all we can do is help you along. You're running the ship. We're here to get you where you're going.
I would add to that a lot of people are putting money in these short-term treasuries as a stopgap because the interest rates being offered at their local banks are so low. And so therefore they're seeing this as an opportunity to increase their yield on their, quote, safe money. And I think that's why advisors should be consulted because we have a lot more arrows in our quiver than what the banks have to offer.
It's one of those situations where, obviously you're going to need to think big picture in your retirement, the 20, 30 years you're going to be spending in retirement, what's going to get you through the distance. So you're going to need some growth potential there. You're also going to need accessibility to money much sooner than that, the money you're going to be needing in the next couple of years. And so getting growth perhaps without the risk of the market is a good way to look. But like you guys said, you hit it on the head, this Tbill and chill. If there's, in fact, a lot of moving parts, a lot of involvement every couple of months, that is the opposite of chill. There is a happy medium in there, and it's really going to depend on person to person. The team at America's Retirement Headquarters, they can help you find what is going to work best for you. You just have to take that first step and give them a call and start developing a plan to suit you. Maybe it is using T-bills. Maybe it is using other vehicles, but it really just depends on your risk tolerance, what you're comfortable with, and what you're going to need. Again, your personal circumstances. It all starts with that phone call, 419-794-3030. That's the phone number, 419-794-3030. You can go to arhq.com as well, schedule a time there, and find out more about the independent income system. That is at arhq.com.